Hello everyone, welcome to EduTap and welcome to today's Finance 360-degree session. So today we are going to discuss two very important news articles and four very important notifications that the RBI has released recently. Okay, so we are going to discuss the small finance banks, the change in the priority sector lending norms for it, or the change in the priority sector lending data for the small finance bank. So that we are going to discuss, as well as we are going to discuss the major relief in the KYC updation and the role of the business correspondents. Okay, so these are the two important news articles that we are going to discuss, and there are additional notifications that are also there that we are going to discuss with these two news articles, with these two notifications. Okay, first of all, give me a thumbs up if I am clearly audible and visible and everything is going fine. Good morning everyone. Thank you for attending the session. First of all, thank you for joining, and give me a thumbs up if everything is good to go. So here, do subscribe to the YouTube channel of EduTap so that you continue getting the relevant videos, and do join our Telegram channel where you will get the PDF of the session. So the PDF of the session you will get in the Telegram channel, and the link for the Telegram channel is provided in the description box below. Okay. Now starting with the first news article. So starting with the first news article. So here, see, the Reserve Bank of India just give me a second. Okay, so this is in regards to the small finance banks. Okay, not KYC. KYC is going to be the next news article. So first of all, okay, there is some problem that is happening here. Just give me a second. Okay. Okay, never mind. Let's just start with the session. Okay, so here the small finance banks. So this first news article is regarding the small finance banks. This is required to extend. See, small finance banks, they need to provide 75% of their ANBC, that is adjusted net bank credit, to the sectors that are eligible for classification as priority sector. Okay, so here basically the small finance bank, they need to provide the 75% of their adjusted net bank credit to these sectors: the agriculture, micro, small and medium enterprises, export, credit, education, housing, social infrastructure, renewable energy. So in these sectors the credit has to be provided. 75% of ANBC has to be provided by the small finance banks. Okay, now further, while 40% of its ANBC should be allocated to different subsectors. So in these categories, 40%, so in these categories, in these sectors, there is 75% of adjusted net bank credit that the small finance bank has to provide. Okay, so 75% of adjusted net bank credit the small finance bank has to provide in these sectors. Out of that 75%, 40% of its ANBC has to be provided to the different subsectors, as mentioned in the priority sector lending guidelines. So that is, here you can see in the agriculture category, in the agriculture sector, there is 18% of adjusted net bank credit that the small finance bank has to provide, out of which within this target 14%, within this target of 18% of ANBC, 14% is prescribed for the non-corporate farmers and 10% is prescribed for the small and marginal farmers. So here you can see that there is the target that is given for the sub-sectors also. So out of the 75% of ANBC that has to be provided in these sectors, 40% has to be provided in the different sub-sectors as mentioned in the priority sector lending guidelines for the small finance bank. And for the micro enterprises, you can see that the small finance banks, under the micro and small medium enterprises, under the micro enterprises, 7.5% of ANBC has to be provided to the micro enterprises under the MSME category. So these are the different subsectors for which 40% of its ANBC, 40% of small finance bank ANBC has to be provided under the PSL guidelines. Now 40% is as per the prescription of the priority sector lending. So the bank is left with 35% to lend the bank is left with 35% to lend wherever the bank wants to lend in these categories in the different subsectors. So basically the overall 75% of adjusted net bank credit the small finance bank has to provide to the small finance bank has to provide to the priority sectors, and out of which 40% has to be provided to the subsectors as prescribed by the priority sector lending guidelines, and the rest of the 35% to any one or more of the subsectors under the priority sector lending where the small finance bank has competitive advantage. So 35% the allocation can be done by the small finance bank as per their understanding, as per their requirement, okay, in any of these sectors, in any of the subsectors. Now coming to the next idea, that what is A and B? So what is adjusted net bank credit? So many of the students asked me that what is the formula for it? Okay, so this formula you do not have to remember, but I will give you a brief overview of the adjusted net bank credit formula. Okay, so the adjusted net bank credit, this is equal to the total credit of the bank, the total credit of the bank in India minus the bill that is rediscounted by the Reserve Bank of India. So let's say that the bank is rediscounting a bill. That means the bank is giving the money to the seller. So let's say there is a seller. Let's say there is a seller that has sold the product to the buyer. Now the buyer is saying that we will pay after 2 months. And the bill invoice has been signed by the buyer that we will pay 10 lakh rupees after 2 months. Okay, now the seller requires the money immediately, so seller will go to the bank and bank will say that okay, the bank will provide the money to the seller. Okay, against this bill invoice the bank is providing, let's say, 9 lakh rupees to the seller, but the bank after 2 months the bank will get 10 lakh rupees from the buyer. So here you can see that this is the discounting of the bill. This is the discounting of the bill. The bank is discounting the bill invoice and the bank is paying 9 lakh rupees to the seller because the seller requires the money immediately. Or let's say the bank is paying 9.5 lakh to the seller because the seller requires the money right now, and the bank will be getting 10 lakh rupees after 2 months. So bank will make the profit of, let's say, 50,000 here. Okay, so this is like a credit that the bank is giving to the seller that will be paid after 2 months with some profit, with some returns. So banks discount the bill invoices. Okay, now when the bank requires the money, let's say bank requires the money right now. So bank has different bill invoices that the bank can give to the Reserve Bank of India and take the money from the Reserve Bank of India, or the bank can give these bill invoices or sell these bill invoices to the other financial institutions to get the money. So if the bank requires the money immediately, the bank can sell its bill invoices. The discounted bill invoices can be sold to the RBI or the other financial institutions. Okay, so RBI is rediscounting the bills, or the other financial institutions are rediscounting the bills that have been discounted by the bank. Okay, so the bill rediscounted by the RBI has to be deducted from the total credit. So bank gave the total credit of, let's say, 1 crore rupees, out of which it sold the discounted bill invoices of 10 lakh rupees. So now the net bank credit is 90 lakhs. This is the idea. Okay, that is the bank credit in India minus the bills rediscounted with RBI and other approved financial institutions. When we deduct the bills rediscounted from the bank credit, we get to the net bank credit. In the net bank credit are the outstanding deposits with the different funds under the different institutions of NABARD, NHB, SIDBI, Mudra and such. So there are different funds with these institutions. So these deposits have to be added. So outstanding deposit with the different funds with these institutions have to be added. So here you can see the adjusted net bank credit for the scheduled commercial bank, for the small finance banks and such, is the net bank credit plus the outstanding deposits with the different funds with these institutions. And then there is further formula that you have to add some investments, you have to deduct some investments, then you come to the adjusted net bank credit. So adjusted net bank credit, this is the bank credit, or this is the actual exposure. This is the actual exposure that the bank has. Okay, so this is the basic idea. This is the adjusted net bank credit. So out of the adjusted net bank credit of the small finance bank, so out of the adjusted net bank credit of the small finance bank, the small finance bank had to give 75%. The bank has to give 75% to the priority sector to the priority sectors, the 7 priority sectors that I showed you. Okay, out of this 75%, 40% had to be given to the different subsectors as per the prescription of the priority sector lending, as per the guidelines of the priority sector lending guidelines, and 35% out of the 75%, 35% has to be given to any of the subsector under the priority sector lending as per the competitive advantage of the small finance bank. Now the revised guidelines, what is the revision that has been done, that we have to understand. Okay, so the revision is that on a review it has been decided that from the 2025-26 onwards, the additional component of 35% of the priority sector lending that the small finance banks can give to any subsector, any one subsector or any of the subsectors in the priority sector lending guidelines. So the small finance banks have free hand that they can provide 35% of the ANBC to any of the sector as per their understanding, as per their competitive advantage that they have. So on a review, it has been decided that for the 2025-26 onwards, the additional component of 35% of PSL shall be reduced to 20%, thereby making the overall PSL target as 60%. Very easy, simple idea is that before 75% of the adjusted net bank credit the small finance bank had to give to the priority sectors, out of which 40% of the ANBC or CEO, BSE, whatever it is, like 40% of ANBC had to be provided to the subsectors as per the norms of the priority sector lending guidelines. Okay, the 35% of the ANBC had to be provided to the subsectors or the subsector as per the understanding of the small finance bank. Okay, so small finance bank can use this 35% of the ANBC to provide the loans to any of the subcategories as per the requirement. Now it has been said that the small finance banks have to provide 40% of the adjusted net bank credit or the CEO, BSE as per the guidelines of the priority sector lending. So the 40% of ANBC has to be provided to the subsectors as per the guidelines of the priority sector lending, while 20% of the ANBC can be provided by the small finance bank to any of the subsector as per the understanding of the small finance bank. So the small finance bank before had the free hand in 35% of the ANBC. Now the small finance bank has the free hand in the 20% of the ANBC. So in total 40% and 20% means 60%. Now the small finance bank has to provide 60% of ANBC to the priority sectors. Okay, so this is the idea. Any confusion here? So on a review it has been decided. It has been decided that in the 2025-26 onwards, the additional component of 35% of priority sector lending shall be reduced to 20%, thereby making the overall PSL target as 60% of adjusted net bank credit or credit equivalent of balance sheet exposures, whichever is higher. The small finance bank shall continue to allocate 40%. So 40% has to be allocated to the subsectors under the priority sector lending as per the guidelines of the priority sector lending. Okay, so the 40% has to be provided to the different subsectors under the priority sector lending guidelines as per the existing prescriptions. Okay, while the balance 20% shall be allocated to any one or more subsectors under the priority sector lending where the bank has competitive advantage as per the understanding of the bank. Okay, so this is the idea. So if the small finance bank has competitive advantage in the small and marginal farmer category or in the micro enterprises category, so it is in the hand of the small finance bank that where they want to provide the lending, that 20%. Any confusion here? So the heading is wrong. It is not the KYC we are discussing. It is the small finance bank that we are discussing in the start. Okay. Now we are coming to the KYC directions. Any confusion till now, anyone? Okay, coming to the Reserve Bank of India, Know Your Customer Amendment Directions 2025. So the Reserve Bank of India has amended 2 processes related to Know Your Customer norms for ease and convenience of banking customers in a notification dated June 12, 2025. So what has happened that for the ease of the customers, for the benefit of the customers, the amendment has happened in the KYC norms, in the Know Your Customer norms. So when were the KYC norms released? So the KYC norms, the Reserve Bank of India issued the RBI Know Your Customer Directions 2016. So these were released in compliance with the Prevention of Money Laundering Act and the rules made thereunder. So know your customer norms were released in 2016 as for the prevention of money laundering, so that we know the customer, we know that whose bank account it is, how they are linked, where they are living. So there should be information about the customer that has opened their bank account through which lakhs or crores are being transferred. Okay, so for the know your customer, so there were the know your customer directions that were released so that the prevention of money laundering can happen. Okay. Now, accordingly, in exercise of the powers that the Reserve Bank of India has under the different rules, under the different acts, the Reserve Bank of India has brought the amendment in the KYC direction. So this is the Know Your Customer Amendment Directions 2025 basically. Okay, so what are the amendments that has happened? So basically, in case of an individual customer who is categorized as low risk, let's say government employees, they are the salaried employees, they are categorized as low risk because the government, if the government is employing the people, the government is taking all the documents of the person, the mark sheet and such, and all the documents are taken. Even the private institutions, the big institutions, they also take all the documents of the individual before employing the individual, right? So in case of an individual customer who is categorized as low risk, usually the salaried employees, the government employees and such, the regulated entities, in this case, if the KYC is overdue, if the KYC is due, let's say, and the individual customer is under the low risk category, so the regulated entity shall allow all the transactions to happen through the account. So let's say the individual customer has a bank account in a bank, so the bank should allow all the transactions and ensure that the updation of the KYC within 1 year of its falling due for KYC. So the KYC is due, so within 1 year of the KYC falling due for KYC, or up to June 30th 2026, whichever is later, till then the KYC should happen. Let's say, so in this what has been done, that 1 year timeline has been given for the individual customer to complete their KYC. Until then the transactions will not be stopped, you will not be in any problem. Okay. Next is the regulated entity shall subject accounts of such customers to regular monitoring in the case where the KYC norms have not been filled properly, where the KYC is due. In that case, the regular monitoring should happen even though the person is of low risk. This shall be applicable to low risk individual customers for whom periodic updation for KYC has already fallen due. So this is for the people, for the individual customers that are in the low risk category and that has the KYC due for them 1 year timeline, or till June 30th 2026 the timeline has been provided for the KYC to be updated. Till then the transactions will be able to happen without any problem. Now, use of business correspondent by banks for updation or periodic updation for KYC. See what happens. First of all, business correspondents. So business correspondents, they are the arms of the banks. Now banks cannot reach everywhere, so banks has the arm, that is the business correspondents, to reach to the different area. Okay, let's say the body is the bank and the arms are the extension of the bank. So business correspondents are the extension of the bank. Here you can see that this is the business correspondent in a village. Now the bank cannot open in a village, but the bank can have business correspondents in the village. They might be some merchants, they might be some store owners, they might be kirana shopkeepers also. They can be the business correspondents. So here you can see that business correspondents, it is not a bank, but it is the business correspondent that is handling the customers on behalf of the bank, and that is allowed to provide certain facilities on behalf of the bank. Okay, so bank cannot reach to the far off areas with the infrastructure that is required and such, but the bank can hire business correspondents that can be the shopkeepers in that village, in that area, to provide the basic banking services. Now it has been said by the Reserve Bank of India that if you have your arms, if you have your extensions, so use it for the KYC also. That use of business correspondent by banks for updation or periodic updation of the KYC. So in this case, see what happens, that the business correspondents, they can take the self-declaration. See, in case of the KYC to happen, the KYC has happened, now the updation of KYC. So usually periodic updation of KYC happens. Like I had a account in Canara Bank, let's say, and I was a minor at that time, or I was young at that time. So after that, they again did the KYC after 2-3 years, and they still call after 2-3 years, they still call for the KYC. So KYC happens in the starting when you are opening the bank account, as well as when you do the periodic, like in case of periodic updation also KYC happens. So there is periodic updation of KYC that is also required. So self-declaration can be taken from the customer in case of no change in KYC information. There is no change in Aadhaar card, there is no change in name, there is no change in the birth date and such. So in case there is no change in KYC information, self-declaration can be filled by the customer, can be provided by the customer, or change only in the address. Only the address has been changed because let's say for your job, for your work, for your like marriage, because of your marriage you are shifting to some other place. So address, in case of change only in the address also, so the self-declaration can be provided by the customer. So this can be obtained through an authorized business correspondent of the bank. So self-declaration can be taken from the customers by the business correspondent. Okay. The bank shall enable its business correspondent systems for recording these self-declarations and supporting documents. Supporting documents also has to be provided, like the photocopy of your Aadhaar card and such, let's say. So the supporting documents has also to be provided with the self-declaration. So this has to be stored in the bank systems. That is, the bank shall enable its business correspondent systems for recording these self-declaration supporting documents in the electronic form in the bank's system. So in the bank system, these details should be provided. Okay. The bank shall obtain the self-declaration. Now in this case, the recording, the business correspondent is recording these things in the bank's system, but as well as the bank can also obtain or can get the self-declaration including the supporting documents if required in the electronic mode from the customer through the business correspondent after successful biometric based eKYC has authenticated. So basically the business correspondents will be allowed to take the self-declaration from the customer and feed in the data in the bank system, or the bank can take the documents from the customers through the business correspondents, and business correspondents here directly are not feeding the data, but they are providing the documents directly to the bank so that the bank themselves can feed the data in. Okay. So until an option is made available in the electronic mode, let's say the electronic system has not been provided to the business correspondent. In this case, the physical documents have to be submitted. So such declaration may be submitted in physical form by the customer. The business correspondent shall authenticate the self-declaration and supporting documents, and the business correspondent shall provide the customer an acknowledgement of receipt of such declaration or submission, and business correspondent will share the data or the documents with the bank then. Okay. The bank shall update the customer's KYC records and intimate the customer that it has been done. So, however, it is reiterated that the ultimate responsibility of the KYC will not be with the business correspondent, it will be with the bank only. Okay. So these are certain guidelines that I hope you are clear about, that self-declaration in case there is no change, self-declaration in case the address has been changed. So these kind of self-declaration can be taken by the business correspondent, and if the business correspondent has the system, the business correspondent can record these in the bank system. But in some cases, let's say business correspondent does not have the system, or the bank do not want business correspondent to feed the data. So in this case, bank shall obtain the documents in the electronic mode, and the bank will obtain these documents from the customer through the business correspondent after the successful biometric and such, and the bank will feed in the data later on then. So in case the electronic mode is not available, in the physical mode the documents will be taken, and the customer has to be provided the information that your KYC details have been updated. So these are certain ideas that I hope it is clear that the business correspondent system will be used for the updation of the KYC or for the periodic KYC. Updation of KYC. So due notices for periodic updation of KYC. Let's say periodic updation of KYC needs to happen. I have a bank account, I have opened the bank account, at that point of time I provided some details, but now the periodic updation of KYC is required. In this case, let's say the updation of KYC has not happened. In this case, the regulated entity shall intimate its customers in advance to update their KYC. Prior to the due date of periodic updation of KYC, the regulated entity shall at least give 3 advance intimations, and at least 1 intimation has to be given in the letter form. Now after the due date, like due date has passed, so before the due date it has to be done, that you are informing that your updation of KYC will happen on this particular date. But let's say the due date has passed now. The regulated entity shall give at least 3 more reminders, including at least 1 reminder in the letter form. Okay, the letter of intimation or the reminder may include that why the KYC has to be done and what will be the consequences if any in case the KYC is not done. So all these details have to be provided in the letter of intimation. In the easy to understand instructions manner for updating KYC, escalation mechanism for seeking any help if required, and the consequences if any failure in the KYC happens and such. Okay, so this is the idea. Now coming to the next point. So now updation or periodic updation of KYC. So this is another notification that the Reserve Bank of India released with the earlier notification. So KYC amendment, in that only these were the points that we have discussed. Now coming to the next notification of Reserve Bank of India, RBI said that the Reserve Bank of India has observed a large pendency in periodic updation of KYC, including in the accounts open for credit of open for getting the direct benefit transfer or electronic benefit transfer under the government schemes. Let's say Kisan Samman Nidhi. Under the Kisan Samman Nidhi, the farmers get rupees 6,000 on the yearly basis, or in the quarterly basis 2,000 rupees is given per quarter to the farmers, right? So there is the direct benefit transfer that is happening in the accounts of the farmers. In the case of LPG also, we get the subsidies in our accounts, right? So in this case where the direct benefit transfer is happening, many of the accounts have been found where the periodic updation of KYC is not happening, and this is not a good thing, because if periodic updation of KYC is not happening, that means we do not know if the person is still using the account or not, or if someone else is using the account, or if the person has forgotten about the account. So in this case, in order to further ease the process of for the convenience of the customers, it is said that we will allow business correspondent to facilitate the process of KYC updation. Okay, the banks are also advised to organize camps and launch intensive campaigns, including special camps focusing on periodic updation of KYC, especially in the rural and semi-urban areas. Branches and the branches having large pendency in periodic updation in KYC. So the special camps have to be organized for the focusing on periodic updation of KYC in the rural branches, in the semi-urban branches, and in the branches where there is high pendency of periodic updation of KYC. Okay. Now the process through which KYC can happen face to face. Let's say customer has come to the bank for the KYC. So you will take biometric, you will take thumbprint, the eye scan you will take. So that is face to face customer onboarding or face to face KYC. Okay, done through Aadhaar biometric based eKYC authentication. So biometric based means you are giving your thumbprints, you are giving your eye scan and such. So this is face-to-face onboarding. Next is non-face-to-face onboarding. That means the customer is not present in front of you. So through the Aadhaar, OTP based eKYC happens. Electronic KYC is happening through the Aadhaar OTP based. That okay, you have your Aadhaar card, now we will send OTP in the mobile linked with the Aadhaar card. So we know that you are the same person, that whose account it is and whose Aadhaar card it is. Okay, such accounts require strict monitoring because the person is not available in front of you. You have not taken the biometric, only the OTP based eKYC has happened. Okay, customer due diligence must be completed within 1 year. Customer due diligence means further details have to be taken within 1 year. So non face to face onboarding can happen. You can do the OTP based eKYC, but within 1 year you have to take more details. Also allowed through digital modes, non-digital modes, the official valid documents copies can be taken and such. Video based customer identification process that is considered at par with the face to face customer onboarding. So what happens, like I hope you have done the video customer identification process where a person from the regulated entity, where a person from the bank, they do the video like video call and such, and you provide your details like Aadhaar card, keep the Aadhaar card in front of you and such. So video-based customer identification process treated on par with face-to-face onboarding conducted via secure live consent-based audio-visual interaction. So audio-visual interaction happens. Obtain identification information required for the customer due diligence purpose in the video itself. Okay. So these are various ways through which the KYC can happen. Okay. Now it has been said that simplified process for updation and periodic updation of KYC. So first of all, regulated entities are allowed to obtain self-declaration regarding no change in KYC or only address change in KYC through the various means, through the letter, through the business correspondence, through the customer's email or mobile number. Okay, the updation or periodic updation of KYC records are allowed to be carried out at any branch of the regulated entity. It's not like that you have the account in this branch, so you only have to do the KYC in this bank, okay, bank branch. So the periodic updation or updation of the KYC can happen in any of the branch of the regulated entity. Aadhaar OTP based eKYC or the video customer information are permitted for the purpose of updation or periodic updation of KYC, okay. But in the Aadhaar OTP based eKYC, I have informed you that there is the point that customer due diligence must be completed within 1 year, okay. So here the regulated entity have been directed to update customers KYC information or records based on the update notification received from the central KYC registry, okay. So regulated entities have been directed to update or to get the information received from the central KYC registry. So through the registry also the information can be sent. Any confusion here in the second? So we have completed the first small finance banks notification, then we completed the KYC amendment notification. Now we have completed the update notification also. So any confusion in any of these? So now coming to the last notification for today. So inoperative accounts or unclaimed deposits in banks, revised instructions amendment 2025. This is also linked to the KYC norms, okay. So the credit balance in any deposit account. First of all, what is the unclaimed deposits? Anyone is aware about it? And anyone who is aware about it? So a question has come in the previous year from this topic also. So the credit balance, the balance that you have in any account that is maintained with banks which have not been operated. So the account that has not been operated for 10 years or more, or any amount that is remaining unclaimed for 10 years or more, they are required to be transferred by banks to the Depositor Education and Awareness Fund maintained by the Reserve Bank of India. Okay, there is no need to enable business correspondent. There is a need to enable the business correspondent to facilitate updation of KYC. So there are various accounts that remain unclaimed. That means the money is not claimed for 10 years. Now the RBI wants less and less of the unclaimed accounts, because the more unclaimed accounts means the more people, they are not able to access the funds that they have. So the RBI wants that there should be less and less unclaimed amounts or less and less unclaimed accounts that should be present, okay, because this is the money of the people that should go to the people, okay. So in this case, the RBI has said that there is a need to enable business correspondents to facilitate updation of KYC so that the accounts, they do not become unclaimed, or the unclaimed amounts, or the unclaimed accounts that are already unclaimed, they can be reversed and the customer can again be connected with the unclaimed account. This is the idea. So here, see, a bank shall make available the facility of updation of KYC for activation. So the bank shall make available the facility of updation of KYC. The updation of KYC should happen for activation of inoperative accounts and unclaimed deposits at all branches. So now let's say the customer has been informed, and at last the customer has got the knowledge that, okay, I had a bank account in Canada, like I have not operated my Canada bank account for, let's say, 5 or 6 years. So, and I have not even done the updation of KYC. So for like, then after some time I go back to my hometown and then I go to the bank. So it is said that the bank shall make the available the facility of updation of KYC. Then I will be able to do the updation of KYC still, okay, for activation of inoperative accounts and the unclaimed deposits at all branches. Next is, further a bank shall endeavor to provide the facility of updation of KYC in such accounts and deposit through video customer identification process, so that we do not have to physically visit the building, we do not have to physically visit the bank, but we can do the video customer identification process for the updation of KYC for our accounts and deposits, okay. Additionally, the service of an authorized business correspondent of the bank may be utilized for activation of inoperative accounts or as prescribed previously. So basically here it has been said that the KYC has to be done even for the inoperative accounts and unclaimed deposit if a person that had forgotten about the account, now they want to operate the account again, so the KYC facility should be provided to them. Okay, now moving forward, so I hope you have understood this. So here, see, now the business correspondent, so it is said that the services of an authorized business correspondent of the bank may be utilized for the activation of inoperative accounts as prescribed previously. So the previous guidelines that we discussed now, that use of business correspondent by banks for updation or periodic updation of KYC, so the self-declaration can be taken by the business correspondent and such. So the same norms will follow here also in case of inoperative accounts. So whenever the business correspondents have to be used for the KYC updation, so the same norms will be followed that we discussed in the starting. Okay, so this is the idea that in case of inoperative accounts or unclaimed deposits, the KYC process has to be done if the customer requires it, if the customer wants it now, after 10 years, after 15 years or whatever. Now the next is that the facility can be provided in the video form also, and the business correspondents can be used for the activation of inoperative accounts in this manner. So this is it. Any confusion, anyone? So this is the first question. I hope you will be easily able to answer this question. So on a review, it has been decided that 2025-26 onwards, the additional component of 35% of PSL shall be reduced to what percentage, thereby making the overall PSL target as what for the small finance banks. Okay. The next question is regarding the KYC, that for the low risk individual customer, how many months, how many years can be provided, as well as regulated entity shall, as well as up to when the KYC has to be done. Okay. Next question is regarding the account, regarding the unclaimed deposits or unclaimed accounts, inoperative accounts. In that case, there is a question. So read the question carefully and try to answer this question. So this is it for today. As well as let me inform you that there is the perspective 360-degree series that we have brought on Monday, Wednesday and Friday at 5 p.m. And this series is very helpful for your answer writing practice. So many of the queries that we get, that we are not able to write the answers, and what format should we be writing in, what are the new topics, what are the current topics that are quite in news, that are important from the descriptive answer writing practice. So in the perspective 360-degree, the current topics or the current news that are quite the hot topic that can come in your ESI descriptive or finance and management descriptive. So such topics are picked that are from the current important topics, and on those topics there is the material that is provided to you, as well as the question that is provided to you, and the answers that you can write in the comment section that are also evaluated by the team. Okay, so you also get free evaluation for your answers. So perspective 360-degree is available in YouTube on Monday, Wednesday, Friday at 5 p.m. It is taken by Jaskran sir normally, and the current topics are taught as well as current topics are discussed for your answer writing practice, and then you also get a homework question for your evaluation. Okay, and the evaluation is done by the team within 48 hours if you write the answer. So this is it. Thank you very much for joining the session. I hope you enjoyed the session. In the first notification that we discussed, that was regarding the small finance bank, I will correct the PPT because the heading was wrong in the starting. So I will correct the PPT and then you will get the corrected PPT. Okay, so here the heading was wrong. It should be for the small finance bank. There is the update that has happened in the small finance bank. So the heading should be that RBI has cut small finance banks lending requirement. So heading, I will correct the heading. Okay, in this in the final PPT that you will get in the Telegram channel. So this is it. Thank you everyone. Thank you for joining the session. I hope you enjoyed the session. Thank you everyone.